All right, welcome back, everyone. We're diving deep into some UK tax changes, stuff happening between now and 2028. Think of it as like your essential guide, whether you're in the UK now or just sort of keeping an eye on things. We've been digging into all the official announcements, government stuff, plus some really interesting financial analysis pieces. And get this, by 2028, these changes are supposed to bring in a whopping extra 29.3 billion each year for the government.
Yeah, that's a serious chunk of change.
Right. It's almost like adding an extra 4 pence onto the basic income tax rate. So let's break this down. What's it all mean for you?
Well, it's a pretty big shift in the UK tax scene. Could affect everyone, really.
Okay, so let's start with something that hits a lot of people, this whole freezing of income tax thresholds. For those outside Scotland, these thresholds are staying put until 2028. So in real-world terms, what's that actually mean?
So this freeze, it creates something called fiscal drag. Basically, your wages might go up trying to keep up with inflation, right? But since those tax brackets aren't moving, you end up paying more of your income in taxes. So even though you're not really better off, you get bumped into a higher tax bracket.
So it's not just the numbers on your payslip, it's like what can you actually buy with it, which makes sense.
Exactly. And this is going to hit millions of taxpayers. We're talking like 3.2 million more taxpayers overall. 2.1 million of those are going to be moving into a higher tax bracket. And then another 0.35 million, so that's 0.35 million, hitting that additional rate bracket. Just to give you an idea, someone earning £30,000 today could be in a higher bracket by 2028 just because of inflation.
Wow, and it's not just a one-time thing either. This is year after year until 2028. It's going to really add up.
That's the key point. This is a long game. And speaking of thresholds, that additional rate one, it's changed quite a bit too. It dropped from £150,000 to £125,140 just this past April.
Yeah, that's a big one. I'm really interested in how that's going to affect higher earners. Can you break that down for us?
Sure. So if you're earning between those figures now, you're paying 45% tax on that chunk of income, up from 40%. Plus, you lose that £500 personal savings allowance on top of it. So doing the maths, that's an extra $12,243 increase in income tax and could be up to 225 months more in taxes on your savings each year.
Ouch, that's a big hit, especially with the frozen thresholds on top. It's a double whammy.
It is, and it makes you wonder, how are higher earners going to plan around this? Will we see them shifting to different investments, maybe focusing more on ISAs or other tax-efficient ways to save? It's something to think about for sure.
It's definitely a lot to take in, especially if you're one of those higher earners. But there's more, right? There are other big changes on the horizon. What else should people be keeping an eye on?
Oh, yeah, quite a few, actually. First up, we've got employer national insurance contributions. Those are going up to 15% in 2025. That's like a whole 1.2 percentage points higher than it is now.
Okay, and what about capital gains tax? Anything happening there?
Yep, both the lower and upper rates are going up. Lower rates climbing from 10% to 18%, and the upper rate from 20% to 24%. These changes kick in for any assets you sell on or after October 30, 2024.
So if you're thinking of selling anything, better check that calendar. Maybe you do it sooner rather than later.
Exactly. Timing is everything. Got to plan ahead. Oh, and while we're talking about that, business asset disposal relief and investors relief, they're seeing tax increases too. The rate for those is going up to 14% for anything sold on or after April 6, 2025. And then it jumps up again to 18% for anything sold after April 6, 2026.
Okay, so we've got income tax going up, national insurance, capital gains tax. It seems like everything's increasing. Is there anything going down? Any good news?
Well, not exactly going down, but a couple of other changes are worth talking about. From January 1st, 2025, private school fees are going to have VAT added on.
Oh, wow. That's a big one. That'll have a knock-on effect for sure, both for the schools and for families thinking about private education. What do you think the impact will be?
Well, it's going to bring in a lot more money for the government, that's for sure. But it'll probably mean private school gets more expensive, could price some families out. Though some schools might try to absorb some of that VAT cost, stay competitive. Yeah. It'll be interesting to see how it all shakes out.
Yeah, definitely adds another layer to the whole education thing. What else should we highlight?
One more big one. The end of non-domicile tax status. That's being abolished. From April 6th, 2025, they're switching to a new system, all based on residency.
That's a huge change for anyone who was benefiting from that non-dom status before. How's this new system going to work?
So basically, the old system meant if you weren't officially domiciled in the UK, even if you lived here, you could sometimes avoid paying UK tax on money you made outside the UK. This new system, if you're a resident for tax purposes, you're paying UK tax on everything you earn everywhere, no matter your domicile status.
So it's about creating a more unified tax system regardless of where your income comes from.
Yeah, that's it in a nutshell. all these changes together, it's a real overhaul of the UK tax system. Going to affect individuals, families, businesses, the whole lot.
It's a lot to digest, but this kind of overview really helps put it all in perspective. So let's bring it back to our listeners for a minute. What's jumping out at you from all this? How could these changes affect your own finances, directly or indirectly? It's worth taking a moment to think about how it all might impact you personally.
It really is. Even if it doesn't feel like it's affecting you right now, just knowing where UK tax policy is headed, that's valuable for anyone, who cares about their finances.
For sure, it's like having a map. Even if you're not quite sure which road you're going to take yet, at least you can see where the turns are. So let's just recap quickly, make sure we're all on the same page. We started with those frozen income tax thresholds and how that fiscal drag can really eat into your income without you realizing it.
Yep. And then there's that additional rate threshold change, losing that personal savings allowance. That's going to hit higher earners pretty hard.
Yeah.
And then zooming out a bit, we talked about the employer national insurance contributions going up and the impact of those higher capital gains tax rates.
Right. And then some really specific stuff, the VAT on private school fees and that change to the residence-based tax system for non-doms. Each of those has its own set of complications.
Definitely a lot to think about, but hopefully this deep dive has given our listeners a better sense of what's happening with UK taxes, how it's all changing.
Exactly. Knowledge is power, especially when it comes to money. But here's the big question I want to leave everyone with. Given all these changes, what can people do, individuals and businesses, to adapt and plan for their financial future?
Yeah. That's the key takeaway, isn't it? There's no one right answer. It all depends on your situation, your goals, how much risk you're comfortable with. But this is the time to be proactive. Maybe look at your investments again. Think about those tax-efficient savings options, or just start talking about it with your family or a financial advisor.
Couldn't agree more. Be informed, be prepared, and make choices that work for your own financial goals. And on that note, that wraps up our deep dive for today. Thanks for joining us. Until next time, stay curious and keep those financial wheels turning.